Good morning, everybody. Hey, it's John King, and I'm here with my weekly market update. It is Friday the 13th of December. Just 12 more days until Christmas. So 11 shopping days remaining. So if you haven't gotten out there and gotten your shopping done, you might want to start this weekend. I know the malls are going to be pretty crowded and they'll be crazy busy next weekend. But let's go ahead and get into the housing market and interest rate market update and the things I'm going to talk about. So today I'm going to talk about why interest rates are up this week and what's going on. I'm going to talk about what's the difference between a home equity loan and a home equity line of credit. When would you use one versus the other, and how do they work? I want to talk about what is lender's title insurance and do I really need it? And there's a unique thing going on right now where Fannie Mae is saying, hey, maybe you don't. But do you want it? Is it a big deal? Let me talk about what that's going to mean. And the final thing I'm going to talk about is bank regulations. Trump's talking about reducing bank regulations. What does that mean? How is that going to impact you? How's that going to impact your banking, the mortgage industry? So I got a lot to cover, and I'm going to go ahead and dive right in. So first of all, interest rates, they're up. Depending upon the program, they're up maybe 1/4% across the board this week. Why? Well, there's concern about inflation coming back. I've been talking about this. I've been talking about the fact that, again, I'm not being political, Trump taking over in the Republican Party, really running Washington, D.C., good for the economy, bad news for interest rates, bad news for inflation. It means people are going to have more money to spend. And that money is going to create more inflationary pressure, moving up prices and causing interest rates to go up in return. So that's really the bottom line of what's happening. There's not a lot of big stuff happening. There's not a lot of big news. The biggest news really is coming out of Washington, D.C. and what Trump is talking about doing, and I'll get to that in just a couple of minutes. But it is definitely just the craziness of the market that we're in right there. And by the way, if you have questions, and I see one question already, I will get to the questions in the end. So feel free to post your questions, and I will cover all of your questions at the end of the topics that I'm going to go over. All right. So again, I wouldn't freak out too much about interest rates unless you're in contract. And then there's the problem, because once you're in contract, you have a finite period of time. Most of the time, you have to lock your loan at least 10 days before close of escrow. So if you go into contract for a 30-day escrow, you have 20 days to play the market. Well, in the short term, who knows where rates are going to go? There's a lot of news that can blow rates. The wind can turn and blow rates one direction or the other. It's kind of like thinking about seasons of the year. And so you know that in summertime, it's warm, and in wintertime, it's cold and rainy. But there's warmer days in the wintertime, and there's colder days in the summertime. And so just because we're in a season where interest rates should be moving down, and they will, means from day to day, you could have temperature swings, you could have interest rate swings that move the opposite direction. So you got to be very, very cautious, very, very careful when it comes to locking your rate. Once you're in escrow, I tell most people, look, unless you know something I don't know, nobody can predict what's going to happen tomorrow. It's like timing when you buy a stock. If you buy it today or you buy it tomorrow, you'll either be happy you made the decision because the price went up the day after you bought it, or you're going to be sad you made the decision because the price went down the day after you bought it. But spread out over time, look, a year down the road and you're like, hey, I'm happy I bought it last year because it was the right stock to buy. And whether I paid $1 more or $1 less didn't change the fact that it was the right decision. That's the thinking about locking interest rates when it comes to owning a home. And you have to be cautious to make sure that you're not taking long-term thinking. Long-term, we think rates are going down. And you can't apply that long-term thinking to a short-term decision. The moment you have the opportunity to lock a rate, my advice in general is you should. Now, if you have to pay extra to lock for a longer period of time, that's where the question becomes, if the market isn't going to change a whole lot or we don't think it's going to, then you're buying an insurance policy for something you don't necessarily need. That's where I think you slow down and say, maybe I wait. So hopefully that helps a little bit. All right, let's dive into my second topic. What is the difference between a home equity loan and a home equity line of credit? So first of all, these are both considered what you would call a second mortgage. Now, why would you take a second mortgage? Because you have a first mortgage and you want to get more money. Now, what are you using that more money for? You're using more money to improve the house. You're using the extra money to pay off debt. You're using the extra money to buy another home. But the key is you have to have equity, meaning the difference between what the house is worth and what you owe. That's the equity. Now, the bank's not going to loan you all of that money. And some people say, my gosh, John, that's my equity. I deserve to have it. No. That's kind of like saying I own a car and that car has value, and therefore I deserve for you to pay me the value of the car, but I get to keep driving the car. No, that doesn't work that way. Like, you own the house, you're living in the house, or you've got the house as a rental property, and you have the equity in it, but the bank is loaning you money with your house being collateral. And so the bank is going to say, look, we need to make sure you still have some skin in the game. And so what you're looking at, and I'll get into that at another time. I've got, by the way, I actually have a channel that is now dedicated to these topics on refinancing. So if you go to my YouTube channel homepage for any of my YouTube channels, you can see my channel for Can I Refi. Feel free to subscribe to that channel. We're just starting to build content there, and I'd appreciate it if you would subscribe to that channel. But here's the deal. If you want to tap into the equity in your home, you have to decide, do I want it as a loan or as a line of credit? Now, a loan says you are getting a lump sum as a single amount of money, and you cannot access more later without refinancing. That's a good thing if you know you need the full amount that you're eligible for. So I'll give you some simple math here. If you have a house worth $500,000 and you owe $300,000, you have $200,000 of equity. But the bank says the most we'll let you borrow is 80% of the value of the property. Now, a lot of people assume that means, oh, well, I have $200,000 in equity, I can borrow 80% of that, which means I can get $160,000 out on a second. It's not how it works. It's 80% of the value of the home is the most you can owe. So if you have a house worth $500 and the bank says the most you can owe is 80% of that, the most you can owe is $400. And you currently owe $300, so you have $100,000 available. If you need that entire $100,000 now, do it as a loan. Why? Because if you do it as a line of credit, it will hurt your credit score. Because lines of credit work like credit cards. And it says, well, you have $100,000 available to spend, and how much of that have you utilized? And if you max out a credit card, it hurts your credit score. If you max out a line of credit, it hurts your credit score. So if you know that, hey, I need this chunk of money and I'm just going to pay it off over a period of time, then do it as a loan. Now, if you say, no, I'm using this money to buy flip properties, and I'm going to buy a house and I'm going to flip it, and then I'm going to pay back the line of credit, and then I'm going to leave the money there ready to buy another one, then it needs to be a line of credit. But it works different than a loan, and you need to be aware of those key differences. All right. So what is lender's title insurance, and do I have to have it? So let's talk about title insurance in general. Title insurance is insurance protecting you, the homeowner, against a claim from someone that thinks they're owed money on the property that wasn't your doing. So for example, if the seller of the home had a second mortgage that nobody knew about, and this person shows up and says, hey, you owe me this money and you got to pay me back. And you're like, wait a second, I don't owe you the money because it's the prior owner. Yeah, but he never paid me and I had a valid lien on that property. I don't know why they sold it to you without paying me off, but I can foreclose on the property. And the truth is they can. So that's what title insurance does. Title insurance protects you against those things, protects you in case another owner is found that was never told that the property is being sold and nobody caught it. It protects you. There's two types. There's the one that protects you, the owner, and there's one that protects the lender. Now, when you buy a home and when you refinance, you must get a new lender's policy to protect the lender. Until now, there's actually a push from Fannie Mae to say, you know what? We don't really need lender's title insurance on a refinance. Why? Because by the time you're refinancing, if there was going to be somebody coming after the property, they probably would have shown up already. So the statistical chance of that happening is slim to none. And so Fannie Mae's introduced a pilot that says, hey, instead of you spending $500 to $1,500 to $3,000 in a title insurance policy that protects the lender, Fannie Mae is just going to collect an extra $75 fee. But if Fannie Mae gets $75 on every single loan that is done, then Fannie Mae can afford to absorb the losses on the few that have title insurance claims. But it's creating a major kerfuffle, a major hubbub with the title insurance industry because they make a bunch of money off of these insurance products that very rarely get claims. So there's only 2 lenders right now that are piloting it, and it's in a small pilot in certain states. but I think there's a good chance this is going to roll out nationwide. I think that the next wave that we see of refinances coming through, I think there's a good chance we're not going to need to have owner's title or lender's title insurance. And this is yet to be officially rolled out, but I think it's important to kind of plant the seed right now. All right, the last thing before I dive into questions, I know I have at least one question here. There's some talk right now, if you're reading in the news, Trump is talking about during his transition that once he's in office, he's going to want to eliminate some bank regulators. He's going to want to eliminate the CFPB. He even floated the other day eliminating the FDIC. So you got to be aware, first and foremost, a lot of this is coming from Elon Musk and his partner, I cannot remember the guy's name, who are the Department of Government Efficiency. And really, all they're trying to do is to decrease the amount of regulation and really decrease the amount of money the government is spending. I think we can argue this is good news, and we can argue that it's bad news. I don't think that I don't think very many of these departments are going away, but I do think that there's going to be changes that are coming. Now, they're talking about merging departments together so you don't have as much overhead. So there's a lot more to come on this, but I've had people asking me this question, and so I wanted to bring it up. FDIC protection on your bank account isn't going away, even if the Department of FDIC is rolled up out of being a separate department and under the Department of the Treasury. They're not talking about changing the services or the protections that are offered. They're talking about consolidating the number of departments that are handling it. All right, so that's everything I wanted to go over. I've got a question here. If you guys have questions, feel free to post them live. If you're watching recorded, post your questions and I'll get back to them later. And so I was asked, will there be an extension on Dream for All for people who just got off the waiting list for Dream for All and got the voucher? So my understanding is yes, they're going to offer one extension to everyone. So if you just got a voucher, you have your 90 days. Now there's no guarantee, but it is my understanding everybody gets one extension and no more extensions after that. So you have 3 months to start. If you can't find a home in the 3 months, 1 month before that expiration date, you're going to get an email telling you can go into the portal and request an extension. You get another 90 days after that, but that is the final extension. So if you listen to my broadcast yesterday, it was only on my Dream for All channel that I said we've got about 300 vouchers that are stagnant, that are likely to roll over to people on the wait list. That means the people who have a voucher, your marching orders are clear. You're going to get one extension and that's it. You're not going to get anything else beyond that. All right. So hopefully that answered your question. Let me know if you have any other questions about that. Otherwise, gang, it looks like those are all the questions that I have. And so I just want to say thank you for listening. Thank you for tuning in. Please subscribe to my other channels. Go to my YouTube homepage and check out. I'm actually going to be creating a couple of other channels in the next month or so. One of those is going to be all about renovation and how to renovate your home, how to get financing for renovation, whether you're doing a home purchase on a home that needs to be renovated or you have a home you own that needs to be renovated. I'll talk about home financing for renovations, completely dedicating a channel to that. Then I'll have a channel that I'm doing on how to qualify when other lenders say no. Lots of different programs that are out there. I'm an expert in a lot of them, and I want to talk about those and have a channel focused on that. So keep an eye on my homepage of any of my YouTube channels, and you'll see my other channels as they pop up. That'll be linked there. So otherwise, guys, enjoy your Friday the 13th. Hope everybody has a wonderful weekend, and we'll see you all next week on the 20th, which probably is going to be my last broadcast of the year, as I'll be taking some time off between Christmas and New Year, as I hope a lot of you guys get to do. But my team will be here to take great care of you. So remember, I'm interviewing to take great care of you. So if you are looking to get a loan, looking to buy a home, I'm here and I'm interviewing for that job. Thanks, everybody, and have a wonderful weekend. Bye-bye.